Good afternoon, everyone. It is noon, so we're going to go ahead and get started. My name is Rachel Keane. I'm a partner in the Winston-Salem office at Womble Bond Dickinson. Thank you, everyone, for attending today for our webinar on business interruption, insurance coverage, workers' compensation, and OSHA issues during COVID-19. We are going to jump right into the webinar today, and our first speaker is Gemma Saluda. Gemma is an attorney in our Winston-Salem office. She's a litigator at our firm, and she practices in the area of insurance bad faith, coverage, employment discrimination, and workers' compensation. Gemma is board certified in workers' compensation, and she's going to discuss the intersection of insurance, workers' compensation, and COVID-19. Gemma, do you want to go ahead and get started with your portion of the presentation on workers' compensation?
Yes, that would be great. And for our attendees, we have decided that we're going to be taking the questions at the end. So as you have questions, please put them in the chat and we'll address that once our presenters have all gone. As far as COVID-19, the first preeminent question is COVID-19 covered under workers' compensation? If I have an employee and they contract COVID-19, is that going to be covered under my workers' compensation policy? The question becomes maybe, of course. It depends on whether COVID-19 is seen as either an occupational disease, which you think of as silicosis, asbestosis, lead poisoning, radium poisoning, or is it more like an ordinary disease of life, like the flu or a common cold? And that question can be different for different occupations. So when you think of something like carpal tunnel, normally carpal tunnel is an ordinary disease of life that happens to many different people over a span of time. However, if you are a secretary or if you're a data entry specialist, then a diagnosis of carpal tunnel might be an occupational disease. So for COVID-19, taking that analogy, there are certain groups that will have additional exposure to COVID-19, and many, many states, including all the ones in the list that I have there, have recognized that first responders, healthcare, child care workers for first responders, and in some states, funeral directors will have a presumption that if they contract COVID-19, it is an occupational disease that should be covered under workers' comp. Now, it is a presumption. So what a presumption means is that in a closed case where there are lots of different facts, a presumption on favor of the employee means that the employee will win most of the time. The employer can then present more evidence to rebut the presumption, but from the get-go, the employee has a little bit of a head start as far as proving that COVID-19 is an occupational disease. You'll see that I have starred Illinois because there's some interesting things going in Illinois right now. For instance, in Illinois, they enacted a presumption that not only first responders and healthcare workers should have that presumption, but they said that everybody under the order that is an essential employee, which could include attorneys, grocery store workers, a very wide swath, was going to have the presumption. That has since been overturned in the last few days. So we'll see how Illinois works out, but I started Illinois because it had a very broad sweeping presumption that has now been restrained back, but I expect it to bounce back and forth. Some states have expanded the class of employees benefiting from the presumption. For instance, Kentucky includes child care advocacy and rape crisis center workers, grocery store workers. Interestingly enough, I believe it was yesterday or the day before, California enacted a presumption that all employees who test positive within 14 days of on-location work would enjoy that presumption. This is an indirect way that California is trying to encourage as many people and employers to encourage work from home as long as possible. So for instance, even if you are a grocery store worker who, has personal protective gear and, has all sorts of protections, if you were on location work in California and you test positive for COVID, then you'll get to enjoy the presumption no matter what industry you worked in. Next slide, please. So taking a step back and thinking about the future, which sometimes is hard during this time period, thinking about how does COVID-19 affect the future cost of insurance? Well, currently it's unclear. Rates are determined, particularly with workers' comp, on a very formulaic thing called loss costs, which are the pure cost for an insurer to cover the claims. So there are two potential factors on whether loss costs are going to go up or down during this crisis. If there are a lot of COVID-19 cases that end up being covered, the loss costs are going to go up. However, if we've seen in data, in particular like the 2008 recession, the dot-com bust, historically, when there is a recession, the overall number of workers' compensation claims go down. The reason why is that with layoffs and furloughs, employers are going to choose the most skilled and likely the safest workers to continue working on their line. In addition, the higher risk categories of construction and manufacturing are more slow to recover. If you are in an industry where you're manufacturing something, typically you'll have lines of equipment and you will choose to only run the most efficient and safest equipment, which is typically the newer equipment. And that will reduce your claims because you're running the safest equipment. You're not trying to run production as much as possible on some of the older equipment. And then finally, there is a perception among employees in times of crisis that if they report their workers' compensation claim, there's going to be retaliation. Of course, that doesn't happen with our employers because they get good advice from counsel. But there is a trend of employees that are just scared to report workers' compensation claims when there is a big economic downturn. Next slide, please. So how about workers' compensation claims that I have active now? They're not COVID-19 cases, they're the normal back injury cases or leg injury cases. Will COVID-19 affect those claims? Well, likely yes. And unfortunately, those costs are going to go up and potentially your premiums next year are going to go up. The reason why is that because there is a limited availability of conservative treatment, such as occupational therapy, physical therapy, and limited amount of surgical space for knee replacements, shoulder replacements, it's harder to get people back to work. So they stay out of work for a longer period of time. In addition, if they're recovered and they're starting to look for work, particularly if the employer doesn't have space for them at their former job, it's going to be a lot harder for them to try to find work. So the cost of existing claims are probably going to go up just based on the situation that we see right now. Next slide, please. So with COVID-19, we see many, many people working from home. In fact, you'll see all of our panelists working from home today. You can see all of our windows, except for Jonathan. But how does workers' compensation impact liability from work from home locations? So you have an employee who is working from home and they get injured at work. Is it covered? Is it not covered? The questions become, does the injury arise from work? Were they working? Were they doing something for the employer when they got injured? Were they taking down boxes full of files from a high shelf to a low shelf? In a case like that, it probably is arising out of work. Did it occur in the course and scope of the employment? For instance, did it happen while the person was on the clock? or did it happen on a lunch break? And here we're going to see a little bit of interplay between going and coming rule, and that is a perception that once you start work, your time on the clock for workers' comp begins. However, if an employee is injured in a parking lot coming into work, or if they are walking around the premises on a break, there is a rule that if the premises is owned or controlled by the employer, then that's going to be subsumed into your workers' comp claim. Well, in this case, because no one's home is controlled or owned by the employer, we might see more defenses coming from they weren't on the clock, they had clocked out, and they got injured immediately standing up from their desk or something along those lines. There might be more emphasis on the going and coming rule and whether the premises is owned or occupied by the employer. If you get a claim from workers' comp from someone at home, you want to take detailed notes of any injury, of what the employee was doing and where. If there is a credibility question, which, hopefully you all have great employees, which I'm sure you do, but if there is a credibility in question, go ahead and pull any data that you might need before it expires for later use. This includes any timekeeping data, any data regarding when someone turns on and turns off their computer. All of that information you should go ahead and save, given that data is probably going to be deleted after 3 or 4 months, depending on your company's policies. Next slide, please. So what happens if you are opening up your business on location and you're having employees return to work? And some of the discussion I'm saving for Mason, who's going to come after me. But right now, there's no clear guidance or safe harbor when considering questionnaires. So for instance, you're returning from work and you get a questionnaire on, do you have COVID symptoms, et cetera. The reason why I say it's no clear guidance is that the ADA hasn't propounded a safe list of questions. They have said in this environment that it is completely fine for you to ask questions about symptoms, but they haven't given anyone a particular form to use so that they know that form is compliant with the ADA. So try to limit your questions to current symptoms or exposures. Those are potentially fine. And remember that the ability to do these questionnaires is directly related to whether the EEOC considers COVID a direct threat. And that's a term of art, a direct threat. They determined in March that COVID was a direct threat, which gave employers a lot more latitude to do things like questionnaires. But if in the future, at some point, COVID is no longer a direct threat, then the ability to do things like questionnaires or taking temperatures might go down. If you do ask questionnaires, which I would recommend doing, in limited fashion, as far as symptoms or contact with other individuals, you must retain that information as a confidential medical record in compliance with the ADA. It does not go in your personnel file. Please implement this policy uniformly and really try to avoid any questions that might elicit answers regarding underlying disabilities. Like, we don't want to have questions that would require someone to disclose they have asthma or they have diabetes or some other underlying disability question. Next slide. The EEOC has explicitly stated that employers can require employees to provide a medical note before they come back to work. However, in this situation and with the burden on medical providers, this might not be practical. But if you decide to do this, if you're in an industry that is a high impact industry for exposure to COVID, like a meat packing industry, it might be helpful to require some kind of medical clearance or a medical note. Once again, do not request any information regarding underlying medical conditions. And the EEOC has explicitly said that employers can measure body temperature before people report to work. However, once again, under the ADA, that information has to be treated as a confidential medical record, which is separate from your normal personnel files. And then as far as cleanup goes, please make sure you have the employee sign the questionnaire. If there is a question of credibility later, there are discipline measures that you can potentially, take in any situation, whether it's a pandemic or not, of an employee misrepresenting facts to you. So please make sure that you have your employees sign the questionnaire. In addition, if you have implemented any new policies regarding COVID, regarding new safety features or personal protection equipment, you will want that signature to also include a statement that they have received the COVID-19 policies. So looking out into the future, thinking about what if someone fails to comply with a policy, in order to appropriately discipline and effectively discipline that employee, you want proof that they received the policies. Typically that happens at the moment of hiring when someone signs that they have received the handbook. But remember, those employees have already received the handbook, they're existing employees. So you're going to want a new certification that they have received those policies. And in particular, that they have received any safety policies that you have implemented. Because in some states, if an employee violates safety provisions, they can either be totally precluded from workers' comp, or like in North Carolina, they could have a percentage reduction in their workers' compensation benefits if they failed to, for instance, wear hard hats or wear face shields or do something that could potentially protect them. I believe those are my slides, and I am on time.
Thank you so much, Gemma. Really appreciate it. And for the participants who are viewing the webinar, like Gemma said at the beginning, if you have any questions, please go ahead and send those in through the Q&A. And next, we're going to have Mason Freeman. Mason is an attorney. He practices product liability, and he's an OSHA litigator. He primarily practices in our Raleigh and Winston-Salem offices. He advises companies on OSHA compliance issues and also defends employers when they receive OSHA citations. Mason also has experience advising clients who are facing catastrophic losses, including employee injuries and fatalities. Today, Mason is going to discuss some of the key points from the recent OSHA guidance on COVID-19 in the workplace. Mason?
Thanks, Rachel. Thank you all for joining us today. We wanted to take an opportunity to talk to you all about what's been going on in OSHA world. I think this is the first time we have seen OSHA really in the news repeatedly for the last few weeks. And as you've seen with, for example, meetings where you've had a large number of workers infected across the country, it's affecting us day to day now. Workplace safety is actually now down to us as the consumer, as you see going into the grocery stores now. So we wanted to take an opportunity to talk to you about what some of the latest guidance from OSHA is, in particular from the employer perspective. How is OSHA treating OSHA inspections, and how are they dealing with citations, and what types of workplaces is OSHA really targeting right now? The biggest question we've been getting from clients is, COVID-19 is everywhere. OSHA is coming out with new guidance all the time. Am I at higher risk for an OSHA inspection right now? The general answer to this is going to be no. For most workplaces, there is generally low to medium exposure risk for COVID-19. And federal OSHA and all of the state OSHA are prioritizing inspections based on high and very high risk levels. And these are exactly what you would think they are. These are hospitals, these are nursing homes, these are medical labs, these are places where testing is being done. So unless your workplace is undergoing specific medical or healthcare type processes, you're probably not at higher risk for an OSHA inspection right now. And in fact, OSHA is telling its field workers, basically, if you have a complaint, you need to process it as a formal complaint right now, unless it is involved in the healthcare or medical setting where there is a high risk for a COVID infection. Now, one thing that we have seen across the country in some states is OSHA is doing spot check on job site. And that's something that we've seen starting out in Oregon, and particularly in the Pacific Northwest, where the COVID infections really started and hit the hardest early on. We're not seeing that in North Carolina yet. We have not heard yet anecdotally that North Carolina OSHA is increasing inspections generally, or is doing any random job site inspections. But as this continues, that's something that you want to be prepared for. And as you're preparing for that, you want to make sure that your written safety policies are taking all of these things into account, all of these things related to PPE, physical distancing in the workplace. And this is when you probably need to get outside help involved, medical help if necessary, legal, someone who can look at your written safety policies to make sure that your workplace is adapting to the latest guidance from OSHA and also CDC, because those do complement one another and they do refer to each other. Can we go to the next slide, please? The other big question we're getting is how to deal with whistleblower complaints. And you've probably seen in the news, particularly at large agricultural processing plants, meat processing plants, there's been a significant uptick in employee whistleblower complaints. And this is basically when an employee is saying, hey, I don't have the appropriate PPE. Hey, I think that there's overcrowding in this particular space. And they're calling their state or federal OSHA to issue complaints about this. And OSHA is already reporting that they're seeing an uptick in this. And OSHA is responding to this, not by necessarily going to your workplace. In the past, if there was a whistleblower complaint and OSHA had the capacity, they would send a field officer to the place of employment to do an inspection. Well, now OSHA is reprioritizing their inspections to these high-risk job sites. So instead, if there is an anonymous whistleblower complaint to OSHA, what you're going to receive is a letter in the mail from OSHA, and it's going to include the specific complaint, the specific issue that OSHA wants addressed. And there's often going to be a response deadline for you to respond to that. And it's important that you take these really seriously. If you respond to those in a timely manner, that will trigger an OSHA inspection. And the recent guidance that came out a few weeks ago from OSHA to their field staff is basically saying, hey, these are the letters you need to send out. This is the information that needs to be included. And if there's no response from the employer, then you can do the inspection. So if you don't respond to that letter in a timely manner or in the deadline that's provided in the letter, that's going to trigger an inspection. And it's important to know that even if that letter identifies one specific issue, under OSHA rules, they can come and inspect your entire facility and they can find completely unrelated citations, completely unrelated to whatever the complaint was. So for example, if you have an employee that was complaining about lack of adequate PPE, and OSHA then comes and does an inspection because you did not adequately respond to that letter in writing, if OSHA sees that you have a machine with inadequate machine guarding or inadequate lockout tagout procedures being done in your facility, they're going to cite you for that. So you're inviting a lot of unwanted oversight into your facility by not adequately responding. And as always, it's important to remember that if you do have an OSHA citation and you have an employee or a third party that is injured and they bring suit against you, those OSHA citations that were issued can often be entered into evidence in trial as evidence of negligence. So don't think that OSHA citation is just going to be limited to that particular proceeding or that particular OSHA citation, because it can come back to bite you if that employee injury or third party injury or customer injury results in civil litigation later on. Next slide, please. As I mentioned, OSHA inspections are not going to be as common in lower risk or medium risk facilities, but as I just mentioned, know that OSHA still has the right to inspect your entire facility. If there is an inspection of your facility during COVID-19, you still have the right to try to negotiate the scope of the inspection and try to limit it based on the specific complaint. Now, OSHA can ignore that. They can still look at your whole facility, but this is where outside counsel can be particularly useful, and that they can work directly with OSHA because they often have relationships already with OSHA field officers, and they can work with them to try to negotiate the scope of what that inspection is going to be. If there is and OSHA finds that there is merit to the complaint, most violations, according to the new OSHA guidance, are going to be characterized as quote unquote serious violations. Now, OSHA has a range of citation characterizations. They can be non-serious, they can just be record-keeping violations, and then you get into what we call serious violations. And these carry higher fines, higher penalties, and these are the type of violations that can be used to often show evidence of negligence later on. And then you get into the category of willful violations, which are even more important because those can be used to support punitive damages in civil cases. And this is something that your liability policy simply may not have coverage for, and oftentimes they don't. However, for most of the cases where there's a question about PPE, in light of the lack of clear guidance for some employers, and in light of the lack of actual PPE that's available, most citations are going to be either serious or non-serious for PPE violations right now. And OSHA has really wide discretion right now to enforce certain rules under the respiratory protection standard. So what they're going to be doing is looking to make sure that you're making a good faith effort to make sure that your employees have access to and are using the appropriate PPE. And every job site and every workspace is going to be different for what that PPE is. And this is also a good time to remember that even if you don't think there is a specific PPE standard that applies to your employees, the general duty clause of the OSHA Act still applies. So you still have to be ensuring worker safety and ensuring that they do have adequate PPE, and relying on the OSHA guidance is one way to do that. Next slide, please. So I wanted to lastly touch on one of the biggest changes that we've seen over the last really 2 to 3 weeks, which are the record-keeping requirements related to COVID-19 cases. And this relates to what Gemma was talking about a few minutes ago with respect to questionnaires and keeping track of employee illnesses. And for general injury and fatality reporting requirements, OSHA has suspended the requirement that you have to report a COVID-19 infection in your employees unless there is, quote, objective evidence that the COVID-19 injury is work-related, and that information has to be reasonably available to you as the employer. So what does that mean? In essence, this means that COVID-19 cases that come from your employees or in your workplace are actually going to be reportable. What OSHA is looking for are clusters of infections among groups of your employees. So if you have an entire line of employees on an assembly line, and all of them are in close proximity together, and all of them contract COVID-19 and test positive during the same time period, then that likely is going to be reportable. But if you have an employee that is showing up to work, calls in and says, hey, I've just tested positive for COVID, unless you have objective, clear evidence that that infection directly stemmed from their work and in the workplace, then that is not going to be reportable to OSHA under the current guidelines. And this is, again, where outside counsel can help you in determining if there is objective evidence, because often the line is not always going to be clear, and you're going to have to make a judgment call about whether or not that's reportable. We're recommending that employers interpret this pretty strictly, because, again, if you have to include this on your injury and illness log, or if you have a fatality and you have to actually report that to OSHA, that's going to be treated as an admission of work-relatedness. And this is going to affect your workers' comp claims, your negligence claims later on filed by an employee, if they or their estates file suit against you, and that's going to impact your rates. So these are some of the key issues that we've been seeing in OSHA world. And I'm going to turn it back over to Rachel and let us know if you have any questions about OSHA.
Thank you so much, Mason. Our last topic today is going to be business interruption insurance coverage. And today, speaking about that is going to be Cal Adams and Jonathan Wright. Cal and Jonathan have both been counsel of record in several of our North Carolina's most significant insurance cases. Jonathan Wright is an attorney who primarily practices in our Winston-Salem office. Much of his practice is devoted to insurance coverage and bad faith, as well as insurance procurement. He has been an officer and board member of the North Carolina Captive Insurance Association and a board member of the North Carolina Bar Association's Insurance Law Section. Cal is a partner in our Winston-Salem office. He is one of our most experienced trial lawyers in the firm. He's tried well over 30-some cases, jury trials in state and federal courts. He has extensive experience in insurance litigation, insurance coverage, director and officer's liability coverage, and defending errors and omissions claims against insurance agents and brokers, as well as assisting policyholders in the purchase of complex commercial insurance policies. Cal, Jonathan?
Yeah, this is Cal Adams. Thank you. I'll go first. Jonathan gets all the credit for the slides regarding business interruption. Yeah, I've been doing this for almost 39 years, insurance coverage work, business interruption coverage. And there are just two main points that I'm going to make, and then I'm going to turn it over to Jonathan. One, and I can't emphasize this enough, if you suffered a loss as a result of COVID-19, loss of business income, put all your insurance companies on notice. That means get in touch with your broker and tell your broker that we've suffered a loss, we've lost income due to either a court order an order by a governor, order by the president, order by your mayor, or for other reasons, because of COVID-19, you've had to close down your business or suspend some of the operations of your business. Put your carrier on, all your carriers on notice. There is no downside whatsoever. It will not cause your premiums to increase. And if you don't give a claim, make your claim now, you will lose your claim. Second, the other reason to put your carriers on notice now is because no one knows what the state governments or the federal governments are going to do about current state of insurance coverage and whether they're going to require insurance companies to provide coverage that they might not otherwise provide under your policies for business interruption coverage. But if you don't make a claim, you may lose your claim if later down the road the state or federal government passes legislation that says that the insurance companies have to cover business interruption claims. And the third point is, if you suffered any kind of business income loss, make sure you are saving all your records that will support that, saving all your records that will document the loss you have sustained, and also make sure that you don't inadvertently, because of an automatic document retention system, that you don't auto-destruct documents going back for the last several years, because if you've suffered a loss and you get to the point where you're put to your proof, one of the things the insurance companies are going to want to do is they're going to want to figure out how much you lost. And one of the things they're going to look at is your revenue for a year ago or 2 years ago. So you need to save all that information. So again, put your carrier on notice and save all of that information in the event you get that far with your insurance company. I'll turn it over to Jonathan at this point.
And I would echo all that. I think everyone on the presentation would. The 30-second takeaway is put your carriers on notice and save all your documentation. If you could go to the next slide, we're going to try and run through these slides pretty quickly. You'll get a copy of all of them, but we think people's questions are probably more important than hearing us just sort of talk about the different areas of the law. So again, it's very easy to give notice. Pick up the phone, call your broker, tell them to put everyone else on notice. It doesn't cost you anything, and it's basically no burden to do so. If you can move to the next slide. This is obviously a historic monumental event in American life, in American business, and in American society. What we have seen over the last 20 or 30 years is after major events in American life, insurance law tends to change and react in a way, just like insurance companies tend to change and react. So even though things initially appear that they're often excluded by laws, insurance companies say they're excluded, either state legislatures or judges in different ways change the landscape of insurance coverage law so that policyholders more likely are able to advance their claims. So we saw this after major hurricanes in Florida. We saw this after Hurricane Katrina and the flooding and the rebuilding of New Orleans and Mississippi, the Gulf Coast. We saw this after September 11th. And we've already seen bills proposed in Congress to create new business interruption pandemic backstops going forward. We just don't know what may also apply retroactively yet. So now there are a number of states which bills have also already been introduced, which would effectively rewrite the insurance policies which you've already purchased to provide business interruption coverage for losses related to COVID-19 and these sort of shutdowns by civil governments, by either the mayor or the state legislature. None of these have passed yet. Typically, they're still in one house of the legislature. They have to get passed by both and maybe approved by the governor, but this could happen. And if you have operations in those states, this could affect you. So as Cal said, it's good to go ahead and have your carriers put on notice so that you will already have timely given notice of your claim. In the event that 2 months from now or 6 months from now, your state legislature retroactively changes effectively the terms of your policy. Next slide, please. There have been a number of lawsuits filed across the country. And after this slide was made, there have been several class action lawsuits filed on behalf of dozens or hundreds of businesses in each individual lawsuit. So the number of businesses that are effectively being represented now is probably over 1,000. They've been filed in multiple different states. They've been filed in state court and federal court, and they've been filed against all number of insurance companies. You can go to the next slide. Generally, these cases, most of the plaintiffs, most of the businesses in these cases are sort of like restaurants, sports bars, theaters, entertainment venues, things like that. But there's also been several Indian tribes which have filed these types of lawsuits, and these Indian tribes are effectively like local governments. You know, they operate schools, they operate hospitals, they have local government activities, they have businesses, things like that. So there's a number of these lawsuits that have been filed, and they're going to be sort of developing these issues. You could go to the next slide. What has already become apparent in these lawsuits which have been filed is that there are a lot of variations across the different types of business interruption policies that have been sold in the United States. Typically, business interruption is incorporated into your commercial property insurance policy. So often you have the coverage even if you didn't buy separate business interruption coverage. That commercial property policy also usually has what's called civil authority coverage, and civil authority responds to shutdowns by the government of your business. You could go to the next slide. It could be as in a standalone policy. It could be in a package of policies, like a business owner's package, or like I said, it could be in a commercial property policy. Next slide. And of course, if you are part of a captive insurance company or you've been involved in a captive group within the last several years, you most likely have some sort of broadly worded business interruption coverage as part of your captive policy. These claims, like typically other claims, the first question is is the loss covered? And then you look at the exclusions and say, are there exclusions that apply? Go to the next step. These are all in writing inside the policy, but you have to read multiple different parts of the policy and read them together. Typically in North Carolina and in other states, you construe the coverage provisions very broadly, and then you construe the exclusions very narrowly. And so there is a question of how they fit together. Go to the next slide. This is an example of your typical, what people call business interruption policy provision. It's sometimes called a business income provision, and it will provide not all your money, but effectively either your profits or either your lost profits or your lost revenues during the period of restoration, which is going to be a set amount of days or weeks or months, and it's often required that it is a result of direct physical loss or damage. And there's certain policies in certain industries which do not have that requirement for direct physical loss or damage. So often in the hospitality industry, that sentence is a little bit different. So you have to actually read the particular policy and think about your particular industry. Go to the next slide. Again, this can be very fact intensive depending on, did you actually find COVID-19 in your facility? Did you have to incur additional cleaning costs as part of your operations? Did you have to hire third-party outside vendors to come do some deep cleaning? Did you have to throw away inventory? And then you have to look at the specific policy because, as I said, different industries tend to have different policies. For example, there are some policies which have been sold in the United States which have a very strong virus exclusion, and the insurance industry is saying the virus exclusion is bulletproof and it completely excludes these pandemic claims. There are other policies which have been sold in the United States at the same time which expressly provide coverage for virus-related pandemics. So if you have the rider or that expressly provides for a list of named pandemics that could be caused by certain strains of viruses, you may have coverage. Go to the next slide, please. This sort of relates to the idea of just certain smells or things wafting around in the air can constitute physical loss when it sort of adheres to your surfaces or affects the usability of a building. So just because you are just because your building didn't burn down or get destroyed by an earthquake doesn't mean you may not have a physical loss, depending on what state you're in, what state law applies to your insurance policy. Next slide, please. Contingent business interruptions, a little bit different type. It is protecting you against losses to people in your supply chain. So Cal had some great examples earlier, but maybe you haven't really been affected, but people upstream of you that you buy from, they've been shut down, or the people who you had a supply contract with and they're supposed to be buying all your inventory, they've shut down. So that's more of a contingent business interruption claim. And there are policies and provisions of policies which include that coverage. Next slide. And that's just an example of one of those provisions. Next slide. Next slide. Skip that one. This is a bit about the civil authority coverage. This will be in a separate portion of most commercial property policies. And this could be a source of coverage for some businesses. It's typically limited in time. You have 2 weeks or 4 weeks or 6 weeks of civil authority coverage. And it may be subject to a sublimit, which is significantly less than sort of the top line limits of your policy. And next slide. So there are some exclusions, as I mentioned earlier, that have been included, sometimes not just in the policy, but as a separate rider or endorsement on the back of the policy. So if you get a copy of your policy, and if you don't have one, you can call your insurance broker and get a complete copy, and then you need to read it all the way through Make sure you read all the riders and endorsements at the end, because those can take away or give coverage, particularly in this situation where after the SARS epidemic, there was a specific pandemic rider which added coverage for pandemics caused by viruses. And also there was a virus exclusion that sometimes was added as a rider at the end of policies. If you could go to the next slide. Just go to the next slide. And the next slide. And you can, okay, here we're at the question section. I guess I'll return it back to Rachel now.
Thanks so much, Jonathan and Cal. If anybody has any questions, please feel free to go ahead and send those in. One question that we do have is if someone's policy has the requirement for direct physical loss of or damage to the property, would you recommend to still go ahead and file the claim even if their broker has said that it's not covered under their current policy?
Absolutely. You can never predict what is going to happen after a major natural event like this. And you can't predict what judges are sometimes going to do. So some judges may take a very broad view of what direct physical loss is and actually change kind of what we've been operating under for the last couple years in the world of insurance law. But there's separate requirements in the policy to timely give notice of a claim. And so you can't just wait 3 years on the state legislature to change the law and then give notice of your claim because you've probably waived it by waiting too long.
Along that same line is another question about the virus exclusion that you mentioned about many of the policies had the virus exclusion after the SARS event. If a business's policy has the virus exclusion, what would you tell them to do?
I would still tell them to carefully review their policy and the facts that that their business has been confronted with, save their documentation and give notice of a claim. Because there have been, the history of this virus exclusion is not completely known to policyholders yet. It will be sort of given a microscopic examination in the courts at some point. And it's better to go ahead and give notice now and let the insurance company explain why they do not believe the virus exclusion, why they believe the virus exclusion blocks your claim.
Rachel, can you hear me?
I can, Cal, thanks.
Okay, sorry. Yeah, I want to go back and answer both questions because I want to tell everyone that it will come as no surprise that both if you have a risk manager or your broker, both of them are probably going to tell you there's no coverage, you're wasting your time, particularly if there's a virus exclusion in there. You just have to disregard what they tell you. Your risk manager is basically educated by your broker, and your broker is basically educated by the insurance industry. And so both of them, have sort of been trained by the insurance industry that there's no coverage, that this is not what this was written for. And as Jonathan said, each policy is different, and you've got to have someone read the entire policy, including all of the endorsements, because until you do that, you won't know what your chances are. And as Jonathan also said, the virus exclusion, nobody knows how it's going to be interpreted. There are lots of arguments by policyholder counsel that I've been reading about as to why the virus exclusion may not apply. So as I said to begin with, if you suffered a loss, you want it to be covered under your policy, go ahead and make the claim. I can't emphasize that enough. That's the first thing I started with, and that's the first thing I tell all my clients. Is if you suffered a loss, make a claim. There's absolutely the only cost to you is the time it takes for your risk manager or whoever to contact the broker and say, we've got a claim, we've lost business due to COVID-19. Would you put our insurance companies on notice? And so I strongly encourage I can't think of a reason why I would ever advise anyone on this call not to submit the claim, because I don't know how the virus exclusion is going to be interpreted. I don't know how any of this language is going to be interpreted. And as Jonathan said, we've seen from some other, we've seen from the Hurricane Katrina, the other hurricanes and other events, not only has legislation been passed, but sometimes the judges, depending on your judge, will be more sympathetic to the policyholder, recognizing that this is, you know, a horrible thing, and they're going to try to find coverage any way they can. So, and so you'll know, we've also know of one lawsuit that's been filed in North Carolina, and we know of another lawsuit that's getting ready to be filed in North Carolina. Both of them, I think, involve bars and restaurants. So that's all of that.
Thank you. The next question goes to a point that we've mentioned bars and restaurants a lot, but there's a lot of other businesses that have been impacted. And so the question is, what type of information would you recommend to our clients to start gathering throughout the process? And one thing that I would recommend, that I do recommend to the clients who have contacted us regarding this, is a lot of this is being done informally. We see millions of dollars worth of contracts being canceled by emails or phone calls. If you receive an email canceling the contract, make sure you're saving those emails. You're still documenting your case that way. And then also, if a contract or something is being impacted, or it might be the supply chain issue, and make sure you're documenting it real time. Everything is stressful enough right now, and in a year from now, you're not going to be able to go back and to recall possibly every email or every phone call that you received regarding the contract. Does any of the panelists have any other recommendations, including the workers' compensation as well, OSHA issues? What are you recommending? What types of documents are you recommending your clients maintain, or documentation internally that you're recommending them to do right now for something that is going to come up in probably about a year or 2 years if it does go into litigation?
If it's actually a loss they've suffered in the past 30 days or 45 days or how long ever the loss goes on, they need to be able to show what their revenue was a year ago during that same time period, or 2 years ago. So they need to make sure that those documents are maintained, and they need to basically suspend any kind of document retention, auto destruction policy that would destroy any of those documents. I don't think they probably would, but they need to be able to show that in March of 2019 or March of 2018 what their revenue was, so that the insurance company can say, okay, and your revenue this year was a third of that, and they can argue that they're entitled to 2/3 of that from their insurance company for whatever the period of time is. And as Jonathan noted, unfortunately, the civil authority coverage, which is what a lot of people seem to be wanting to hang their hats on, that's typically only for a loss of 30 days. So for some folks who are suffering losses and are going to suffer losses for longer than 30 days, their insurance lawyer is going to have to figure out a way to argue that their loss was not just a result of civil authority, that there are other reasons their business has closed or has slowed down and why they're continuing to lose business.
Thank you.
This is Jonathan. I wanted to pick up on a question that one of the people watching has asked. And the question is it a legitimate position that if your business closed due to a civil authority order, not because you had a virus incident in your facility, you may have coverage? That is precisely the position that a number of the policyholders, so the number of the businesses, have taken in many of these lawsuits that have been filed across the country. I haven't looked at the North Carolina lawsuit closely enough that's been filed, but certainly in other jurisdictions, that is the position that is being taken. I can't control the slides right now, but I had an example of the policy language about physical loss or damage to your property. And there is a question in insurance law as to whether there's a difference between damage and loss. And so is loss of use enough, even if there's no damage, to trigger things like civil authority or business interruption coverage. There's also a portion in most insurance policies which goes back hundreds of years, the time of ships sailing at sea, and it's called the sue and labor clause. And policyholders are making the argument that under the sue and labor clause, any sort of prophylactic measures that they had to take, including buying extra supplies or closing down their businesses to prevent future bigger, worse losses, are therefore covered under the commercial property policy. So yes, that is a legitimate position that businesses are taking.
And it also doesn't have to be physical loss, necessarily have to be physical loss or damage to your property. It can be the neighboring property. For civil authority loss, it could be something else. Somebody's gonna have to show some sort of physical loss or damage somewhere, but it doesn't always have to be on your property. There's the simple fact of closing may be enough. So no one should be concerned to say, gee, I didn't suffer any problems. I never had anybody come into my business that had COVID-19. I didn't have to close my business to wash everything down because somebody came in and contaminated it. It may not be, given the policy language, it may not be necessary for you to show that you had any actual harm or damage on your property as long as you close or partially close. It doesn't have to necessarily be a complete closure either. It can be a partial suspension of business that you can possibly recover for that loss as well.
And before we wrap it up, I'll actually mention a case. This very issue that was just asked from one of the participants is the type of cases and deck actions that we're seeing across the country. But historically, we'll go back to how judges can sometimes change the law where in a policyholder had the direct physical loss was required, and it went up to it was Georgia Supreme Court, and they found that a hurricane that was brewing hundreds of miles away was enough of a reason, and that was enough of the threat of the direct physical loss that the court then provided coverage to the policyholder. So the takeaway is go ahead and file with your carriers, put them on notice. And at this point, we don't know how the courts and legislature they're going to rule in a year or 2 years from now. But what we have seen historically, repeatedly, especially after hurricanes, catastrophic hurricanes, as well as after 9/11, we see that the legislature as well as the court system steps in, and they can sometimes take your existing policy that if you read it would not have coverage to turn it into having coverage. Before we exit, I would like to thank everybody for attending. And if you have any follow-up questions, please do not hesitate to pick up the phone. We're all in our homes, but we're all by our cell phones. Send us an email. We're happy to talk to you. And as well as, if you aren't aware, we have a COVID task force at Womble. I'm one of the partners on that task force. We have a website that you can go to. It's a hub that talks about everything from PPP loans to what we're talking about here today. We also have our final, it's our third and final Return to Work webinar on May 13, which will discuss a lot of deployment issues. The first two webinars, in case you missed those, they address liability and environmental concerns, and they are available on our website now. So again, our last Return to Work webinar will be on May 13th. We wish your families and you all health, happiness, stay well, and again, if you need anything, don't hesitate to reach out. And we thank you for your time.
Thank you.